All right, everyone. Let's go ahead and get started. Welcome to the Saturday live stream. Let me get an audio check from everyone, see how the audio sounds, and we'll just jump right into it. Hopefully, everyone's having a good start to the weekend. There's about a 20-second delay here, so I typically have to wait about 20 seconds to get information from you guys. But what we're going to do in this live stream is typically what I do is I do a general brief coverage of the markets just to kind of show you guys where I think we ended up throughout the week. And then I go into charts and stocks you guys want me to look at. I'll give you I'll give you basically a brief analysis on it based on what I see in the charts. And that's it. And then just, try to answer any other questions that you might have around the markets. Okay, looks like the audio is good, so I'm going to get into it. This is the, Money Maven stock market live stream. So we're going to go for about an hour, is typically what I give. And let's get into it. So, Triple Qs, I'm on a weekly chart here. Just want to kind of highlight. There's a couple high-level concepts I think it's important to highlight. So, one, you've got clear downtrend right here. And you guys, my charts become a mess, especially on the weekly chart, because they are like a battle zone for me, and especially since the fact that I'm doing videos and also giving out in the private member group chart pictures and things like that. I'm doing a lot of markup. I don't have time, especially during the week, to go through and clean it all up as I'm throwing stuff out and pointing it out to you guys. And then, and I'm also trading myself, so I don't have time to be cleaning charts up. I try to get the information out, and that's really what I'm attempting to do on this channel. All right, so yeah, Friday's move might be a bull trap. We have a downward trend line. All right, we're in a bear market. That has not changed. So we always want to approach the market from that concept. We are in a bear market, and that has not changed. Now, when maybe we'll start to see things change, and if the picture starts changing, then okay, we can start to change our tune. But for now, nothing has changed. So that's it. Bear market, downward price channel. Now on the weekly, you do have bullish divergence on the weekly RSI, and it's down here or on the PPO, and it's on the RSI. So that is true. We are still, one thing you want to notice is you've got kind of this zero line basically, and that usually indicates bullish and bearish trends. So we have a bullish divergence, but down in the bearish kind of parameters of this indicator. So when you're above the zero line and you're rallying, it's bullish, and when you're below, it's bearish. So still bullish divergence down below here. So maybe that's going to signal that we're going to have a more powerful bear market rally. Okay, I think that could happen, but until we see, there's certain things that have to technically happen for me to say, okay, this is going, this is what I see now in the charts, because I don't see that yet. So zeroing down to the daily chart. All right, so here's the price action from Friday. Obviously, you rallied. We had this, so we did hit our target. All right, so let's recognize that. Last week, although I did give some profit back on Friday, and I'm sure many did, that was, at least watching my channel, we did have a profitable week because I did hit my target. And that is basically, we hit our target here at 274.95, okay, 275-ish. I was talking about 275.50, 275. That was kind of my area. I'm always gonna treat a level as a range, maybe 50 cents, a dollar. It depends on the instrument. But basically we hit that target. I pointed in the private member group, hey guys, target hit. I put out the video at the end of the day. Obviously, if you didn't recognize that was the target, then maybe you, weren't able to capture that profit. But a lot of people, definitely in the private member group, I cleanly said target hit, and I'm going to flip, I flipped long for a bounce off that and caught a little long, nothing huge, but caught a long trade. Then on Friday then on Thursday afternoon I looked to flip short. I was looking for another move. Here's how I was thinking we were going to go like this down to. Really, what I was looking for is about this 270. To me, that seems like really good support. You can see here on the daily chart, right there, there. It's just this. This was kind of a range area, and that's where it looked like really good support. So I was thinking, okay, we're going to continue to drift lower down there. However, the major target was hit. So that's that. We didn't get that, obviously. Had to stop out. All right, so now let's go down to the hourly chart. On the hourly chart here, we have, and I was looking at like the 5-minute and stuff, trying to hone an entry for a potential short. on the hourly here, so obviously 283.75. That's kind of your former area of resistance. At the end of the day, we got the trend line just overhead, so I'm not confident that where we're at right now, which direction we're going to go, we could rally up and hit that. That's big resistance. So, I don't expect us to just get through there. What we could do is rally up there, kind of consolidate for a little while, and then break. Okay, we start to see that, depending on what the momentum indicators and stuff look like, then maybe we're going to have, maybe we're going to put this bear market trend behind us and stage a more sustainable bear market rally. I still think it's going to be a bear market rally, and there is always the possibility that we're starting a new bull market, but that this hasn't happened. So until I start to see any of that, I'm not going to anticipate it or trade it. So that's that. We could rally up to the trend line. Maybe we get rejected here. The big thing for me, and it's this Apple chart. It's just really tough for me to think that, Apple is such a heavy hitter in the market. It's the largest stock. It's weighted probably the heaviest it's definitely weighted the heaviest in triple Qs. Triple Qs, I think 40% of triple Qs is Apple and Microsoft. So, you have to watch Apple, and I think it's just prudent for everyone, if you're trading the markets and especially trying to anticipate general index direction, then you need to watch Apple, because this thing's in the Dow, it's in the S&P, it's in the triple Qs. All right, and this is a classic bearish rising wedge. It's pretty decently formed. It's very clean on this hourly chart. And the measured target of the bearish rising wedge is the widest part of the wedge, which is right about there. And we broke, so our breakdown was here. Okay, you can measure it like that. I think that's one way to measure it. Like that. We broke, and you would anticipate that the breakdown, the measured target, would get us down to, it says 131, but usually what I'll do is take kind of the nearest support level, and just that will be kind of the target. And as far as I can tell, that is about 130. Okay, 130.50. So 131 down to 130, anywhere in there, that's our measured target. And we did not hit that major target. So what did we do instead? We rallied for a back test. All right, so technically, it's very objective to short right here. I did take a short on Friday at the very end of the day. I figured they were pumping it all day, and it looked like they were just going to continue to pump it. So I waited pretty much till the last minute and then took my short. We were basically right there at resistance on Apple. I shorted Apple. And a little bit of triple Qs, but nothing major. And it's not, it's just another shot. I just couldn't help myself with how Apple looked right there at resistance like that. So it's, I don't know if it's going to work out. I didn't really want to point it out to the channel, because obviously we had stopped out of the trade, and, it's not always what I do. I just want to point out the technicals, show you guys key levels, give you guys an idea of where I think things are going to go. I don't really necessarily want everyone following me in and out of trades. And I have a lot of people asking me, hey, what are you positioned in? I can tell you that, but the thing is, I execute my trades. One, I use light speed desktop trading app. So all my trades can be loaded up in the difference between a desktop app and the web app. The web app, you have a web form, you have to load up your trade, and then you hit execute. It has to send the trade to the internet, and it's slow. Whereas the desktop app, I've got a control panel, and I can have it all loaded. And I just click a buy button, and it executes it pretty much instantly. So I can literally be long and short, triple Qs 10 times within 10 seconds, So, sometimes I'll do some scalping in there, and I'm not going to tell everyone all about that stuff. I'm trying to give you guys kind of stable trade ideas that, don't require you to sit there and monitor every tick. So, again, this resistance right here, it just looks like a back test, and it looks like we're going to do that. Whether we do or not, I don't know. I'll keep my stops tight. I'm not going to let it go too far. We start to get up into this area, and I'll probably stop out. All right. So I'll lose small if I do lose. All right. So that's Apple, and that is my thoughts. Again, also negative divergence. You see, like this high, and it was pretty much it's a new high. Let me kind of clean this up, and I'll show you guys. This high right here is, let me just get rid of all these markings. See, we basically made an equal high right here on this hourly chart. Pretty much at the end of the day, they just popped it up there, and it's a divergent high. All right, see the momentum, less momentum than before. So momentum still moving down, and price made an equal high. So that's a divergent high. Now, unless they just continue to ramp this thing up, it's a divergent high. And so divergent high, bearish rising wedge pattern, backtest of resistance, that's as good as it gets in terms of an objective short entry. So it's very low risk. I can stop out. I know where I'm wrong, and I have a good opportunity for profit. So I'm looking for a move down here. All right, 130. It's about a 5.5% gain if I can get it. And I can give myself a 1% stop loss, I think. Maybe 140-ish. Yeah, let's say 140-ish or so would be about a 1% stop loss. And that would give me a 1 to 5 risk-reward ratio. Very profitable. You always want to be taking trades that have a favorable risk-reward ratio. Guys, I teach that in my course. That's one of the concepts. I think it's important. It's a very important concept. You want to make sure that you're taking trades that have a higher potential for profit than they do for loss. So check out that course if you haven't done so. It's kind of a no BS course. It's literally a lot like my videos, but I broke out each concept into its own separate videos. Priced it affordable, so I think it's a good value for sure. It'd be like if you could sit down next to me at my computer and I could just sit with you for like 2 or 3 hours and talk through, how this whole technical analysis thing is done and how to approach the markets. That's the information I put in the course. Link in the description. All right, I've gone through the markets enough, guys. I'm going to get into your guys' into your picks now. So sorry if I kind of get off onto a rant. I just want you guys to understand how my mind runs through the markets and how we closed out. All right. So we're going to start at the top. I just typically start at the top, work my way to the bottom. If you do a super chat, I'll usually jump to you, and that's how we go. So Joe, Commodities. All right, well, I kept glancing over at Commodities this week thinking, okay, are they going to run? Are they going to run? I just didn't see enough to make me that interested. Like wheat, boring. Joe bounced off my buy zone. I missed it. I didn't get it, so, but I had this buy zone marked out. And I even called it buy zone. And look at that. Just a perfect tag at 40.75, and boom, just rallied right off of that. I don't know why I didn't jump on that, but I missed it. That thing's rallied off that buy zone 10.5%. So, yeah. So I don't know. I don't know right here. Back down here, that was the buy zone, so I liked it down there. Um, excuse me. And it was a divergent low. I mean, it was just a beautiful buy. Look, you had bullish divergence there. You're at the buy zone. It just was a very objective long, and I just didn't jump on it. So sorry, guys, I can't catch them all. So that's Joe. Where it's at now, get down to the hourly. See, the thing is on this one, there's just not a lot of liquidity, so it's kind of hard to see. I don't see anything telling me that this is done running. I don't know. It looks like that was maybe the buy zone, and maybe it's going to start an uptrend, but I just it's not objective to buy it here, so I'm not going to do that. All right, IAG, that's a gold stock. I haven't looked at this one for a while. This is a small kind of junk stock. Junior miner, they're very risky, so I don't prefer the junior miners. If you do the junior miner, look, possible revert. I had that marked out as a head and shoulders, reverse head and shoulders. Head and shoulders are probably one of my least favorite patterns because they just come up a little more often. What I look for the head and shoulders is a head and shoulders at the end of an extended uptrend or downtrend. All right, so on an extended downtrend, you look for the reverse head and shoulders. So it's a bottoming pattern, and that looked like it there. And sure enough, it was. And support, we had this downward channel here. They did play a lot of games down here, but that's how they do it. They run stops. They fake us out, and they get it. They get me in this kind of stuff too. It's sometimes very difficult to, they do a lot of fake out moves. So, and that's why. But that's the thing. One thing about trading is if you get shaken out of a trade, let's say you get stopped out, but the technical setup just shows up, right? It just shows up again, maybe the next day, the next week, says, oh, here I am again. I just take it every time. I just stick with it. As long as it's there, if they shake me out one week and then the next week, all of a sudden, the setup is there again, you take it. Because the probability says if you're taking good setups with good technicals, with good risk-reward ratios, yeah, they're going to get you every now and then. They're going to fake you out, or a trade just doesn't play out. But more often than not, they're going to play out, and you have a good risk-reward ratio, so you will make more than you lose as long as it's a math game. As long as we're having good mathematical setups, and that's what I'm teaching here is finding good mathematical setups, then, over the long run, we make money. And when I say over the long run, the reason why I say that is because any one trade could not work. We don't want to load up on any one position and say, oh, okay, this is the trade that's going to work because the setup is so good. Even the best setup, if you load up and that's the one that doesn't work, that's the one that cleans you out. So, taking proper position sizing, another concept I teach in my course. Guys, one thing I'm thinking about doing as well, I'm thinking about redoing the course a little bit. It's been a couple years since I did that. That was really my first attempt at putting this information down into a course. I did it at the request of all my subscribers. They kept asking me if I had something, and I didn't. And I didn't really feel like doing it, but after having so many people ask for it, I said, okay, fine, I'll do it. And when I came out with that, I priced it at $99. I had it at that price for about a year and a half. Bumped the price up, and it's been at that second price level for a while. I'm thinking about redoing the course. I don't know if I'll bump the price up, to be honest. I might just leave it where it's at. Maybe a small bump. I don't know. It's not gonna. I don't want to price the course too extreme, but I would maybe like to just polish the course a little bit, and I've probably missed some concepts that I'd like to cover. There's like Fibonacci's that can be helpful after. I find Fibonacci's, like, here's an example. Like on this is rallying in an uptrend as far as I can tell, and a little brief dip here. So it's not the cleanest chart, but let's just say we're just rallying. You could mark that out. I only have 2 data points, so it's not. I can't call that a trend. So again, for me, I don't like the chart, but one thing is sometimes you'll have a chart that's just trending up, 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 and it's diverging, diverging, diverging. So that's something I'd look at and say, okay, guys, we're getting ready for a move here. Let's find the entry. We'll get the trigger. We'll take the trade. It'll run down and start hitting our targets. At that point, maybe there's no real divergence and the trade kind of worked. All right, the Fibonacci's can help you find the moves after these kind of trending moves play out. So trend break, and then once you start getting into this kind of mess like this, then the fibs can help you find key levels. So I don't use them a whole lot, but if you guys are interested in that, let me know. I was thinking about doing it. I'll probably have to bump the price up a little bit just because there will be some time that will go into that, but excuse me. All right. So this one, you do have some negative divergence starting to show up on the, this is the daily chart. So yeah, no break a trend, and I can't define a super clean trend, honestly. So, again, it's this kind of a gambling stock. If you bought it down here, and this was the reverse head and shoulders, the buy signal really came, to me, it looked like right there. If you bought it there, I mean, that's a nice 220%, 7% run. Obviously, these things can run quite a bit, but it doesn't hurt to lighten up and maybe get an established trend. I'd look at GDX, for on that, or GDXJ. That's the juniors. We can look at GDXJ. I haven't looked at that one for a while. So this has a better trend right here. It looks like about that on the daily. All right, so you're still within trend. Trend is not broken. No reason to exit. You do start to have some negative divergence here. So very similar to that last one. So it tells me the trend is running out of steam, but not out of steam yet. So no sell signal. So tighten stops would be my, suggestion. Just tighten stops a little bit. Now, these are volatile, so if you're too tight, you're going to get stopped out, but I wouldn't give back all this profit, All right, that's it on that one. So hopefully, guys, and then while I'm at it, let me just look at the GDX, because I know there's lots of people interested in gold and all that, so we'll just cover it now. All right, so look, negative divergence on the PPO daily. We can call that negative divergence on the RSI as well. We're in an uptrend. I've got some key resistance here at about 33.50. Several reaction points there. So yeah, I think we probably get up there. Starting to lose momentum, so tighten stops. Gold doesn't look the same. The metal. Here's like gold futures. They look bullish. The metal looks bullish. Let me look at gold bullion. That looks bullish. So the metal looks bullish. The miners look like they are running out of steam, but that doesn't mean they, there's no sell signal. No reason to get short. Maybe just tighten stops because they could just burn through that divergence and continue higher. The metal looks bullish. So, all right, Netflix. All right, let me go to Netflix. Sorry, guys, if I'm taking too long. I do try to be thorough. All right, so again, Netflix has been battling out with this gap fill. All right, so that's resistance. All right, just mark that as resistance. Understand that is resistance, and it's right there at about 329.28. Okay, key resistance there. Now, as I zoom in, obviously, here's the first attempt to break that resistance. It failed. The next attempt gapped up on earnings. Again, earnings is the wild card. You always, a lot of the time, it just depends on how I feel about the stock, but sometimes it makes sense to lighten up before earnings, let that kind of work its way out. I love to come into a stock after the headlines are out of the way, like earnings, and then find a good technical setup when I don't have to worry about earnings. That's usually the best, but all right, so gapped up. All right, so let's call this a breakout, right? Because obviously it gapped up and broke out over the price. Pretty impulsive, and we'll just call that a breakout for now. However, excuse me, negative divergent breakout. All right, this is a breakout that's occurring with negative divergence on the daily chart. Let's look at the hourly. All right, so same thing here. Negative divergence that's occurring on the hourly. Let me kind of, oh, sorry. Sometimes when I have to grab these, it's very difficult. This RSI here, all right, so it's still a divergent high, even on the hourly. So that's the most important thing I'd watch for. If this does not burn through the divergence and it remains intact, which means you'd want to start to see these things turn down, you know, relatively soon, confirm the divergence, then that means that this is a divergent high. It's likely, not guaranteed, but high probability it's going to be a false, it's going to be a bull trap. All right. So in that situation, if you're anticipating a bull trap, I wouldn't take the breakout. All right. I wouldn't go short on, you know, what I would do is look for the break back below resistance, 329. That's the sell signal. Okay, so you could chop around here for a little while, diverge for a little while, and then randomly break back below. And you got to trap the bulls. In order to trap the bulls, you need to have some bullish price action where you're just grinding around, all right, and then you trap the bulls. So that's, as of now, I would be anticipating that unless I see the divergences start to get taken out. If they get taken out, then that changes the picture. And then if that happens, then I would say that's bullish. If the divergences get taken out, I'd say that's bullish. Would probably run up here. There's a little level right here as well. You could mark that out. It's about the midway point, 387.80, 463.75, and then you obviously have another gap to fill at 507. Those would be the levels on the upside. As of right now, I would be anticipating a bull trap, but you know. Okay. I have nothing in that gas. It's the Widowmaker right now. It's just going straight down. I don't see any signs of a reversal, so I'll keep an eye on it. There will be a trade there for sure. It's just not there yet. So Tesla, downward price action, downward channel. Could obviously rally to the trend line. Bullish momentum in the short term on the daily chart. Let's get down to the hourly. Yeah, I think it probably goes higher. You know, I think it probably could continue up to this trend line. I don't have negative divergence, you know, because you haven't made a new high in price. So if it wants to do this, boom, that would probably be negative divergence. But right now it looks bullish. Mark the trend line out. I think that's likely to be resistance. And probably here too. Looks like you've got some kind of resistance right about there. So this might do like something like this. It might, and then pop, all right, and something like that, and be a divergent high. All right. No reason to short that one right now. Visa. Try to keep your guys' picks to 1 or 2 if you can. Also, I got 29 likes and I got 100 viewers in here. I you know, hopefully I can, guys, you can hit the like button. It's literally just takes you like 1/10 of a second to click a button. I'd appreciate that. All right, Visa. All right, so Visa, bigger picture. All right, you have this downward channel breakout here, breaking out on divergence, negative divergence. So this is all you know, each new high has been a divergent high, including the most recent price action here. All right, so let's get down to the hourly. See that momentum just dropping off, just straight down. Now, yeah, it's starting to turn up. Here's how I'd play this one, at least as of right now. All right, this price action, we just made a new divergent high on Friday. All right, that's another divergent high. It can rally a little bit more, but unless it has a monster rally, it's going to be a divergent high. All right, so what I'd be watching for, because I think this is a decent setup, I've got this trend line here on the hourly. Just for if you guys want the pinpoint accuracy entry, I would just watch this hourly here. When this breaks, that's probably your sell signal. All right. And that would likely set this up for a move down to this kind of bigger trend line and the 200-day moving average. They'll probably try to hold it again there, probably consolidate, and then continue to break down. I think there's a potential swing trade here, but we no entry yet. All right. So unless the divergence gets burned through, which I think it's pretty low probability just given the nature of what this looks like, I think that we'll have a sell signal relatively soon, but nothing quite yet. So it's just how it's diverging, all this price action. It looks like this is going to be a big bull trap, all of this. All right. No guarantees, but that's what it looks like. All right. Baidu. These China stocks look pretty bullish last time I looked. All right, bullish. That's it. It's bullish. Bullish trend on the daily. Bullish momentum. All right, we're making new highs in momentum. It's bullish. It's by the dip. All right, now until divergence shows up and whatnot, it's bullish. You know, you've got some resistance right up here. We'll just call it right there. I like that as resistance. And that's where I think this is heading. 155.75. Excuse me. All right, that's it. Disney. All right, so you have a breakout. Looks like we have a downward. We have a bullish falling wedge on the daily. A big bullish falling wedge. We have bullish divergence, big bullish divergence on the daily, and we have a breakout. Now we're at the 200, so, and you have negative divergence on the hourly. So I don't know. We'll see how this comes out on Monday. Not something I want to be long here. Let me see how this plays out. The bigger pattern is bullish, and the smaller pattern is bearish. So this might consolidate for a little while. Okay. VRTX. That one, I think that one was kind of interesting. Oh yeah, see, that's a back test. So look, bearish rising wedge, nice clean bearish rising wedge on the daily. Sell signal here, back test. Didn't get the full back test, so maybe they'll do that. You know, I always hate when they just get it close but don't quite get there. I love to have the perfect entry, but you don't always get the perfect entry because when everyone sees it, they step in early. So, yeah, I don't know. Maybe this wants to rally up and like make a slightly new high. That would be beautiful. If it could just pop right in there, make a new divergent high. Maybe it does it on earnings, and it still has that negative divergence on the daily, and it was a back test like that. That would be a beautiful entry for a short, okay? And then in that situation, you're probably going to come all the way down here. All the way down to 240-ish, something like that. That's your longer-term trend line. That's where I think this thing's heading, all right? I would love to have that entry right up in there around that 320 area. So we'll keep an eye on it. Let me put this one. It's a pharmaceutical, so it's not my favorite, but let me put it on my short list. There we go. Oh, I already have it on there. Okay. What's it look like on the hourly? Yeah, so you don't have negative divergence on the hourly, which tells me we are maybe going to get that pop up to that 318, 319. You know, you get to 319, that's great. That is a back test, and that's probably where I'd probably start building a short position. I'd love, you know, if it could pop and make a new divergent high, which the trend line makes it difficult, but they could just do like a one-day intraday kind of pop with a divergent high on earnings, and then fade. You know, that's what I'd kind of be looking for. But you could maybe starter position right up there around that 319, 318 area. And then, but you see, you don't have the divergence. So that tells me if you pop soon, it'll be like this. You'll have the negative divergence at that point. We have negative momentum, but we don't have a higher high in price. So if you have the higher high in price, now you have the divergence. That's a decent one. Decent setup. Just a little more work to do. All right. Let's see. ZG. Zillow Group. Well, look, I mean, you know, bullish momentum. These were divergent lows down here. Okay, you've rallied. You have that's a decent rally. Looks like I've got some resistance. I think you're kind of in the range of resistance, somewhere right in here. Yeah, I mean, these are the levels of resistance. Nothing on the daily that tells me, you know, there's no negative divergence on the daily. We do have it showing up on the hourly. So that's why I was saying we're in the range of resistance. So I think you're probably going to get a pullback, but they could pop it a little bit more and then break. That negative divergence on the hourly is likely going to play out for some kind of a pullback. There's your trend line on the hourly, and maybe we're going to do a back test and then fail. All right, so pop it, back test, fail, and get some sort of rejection. And then I would look for the gap to fill right down here. All right, that would be my trade setup on this one. Pop it, make a divergent high, get rejected. It's objective, I think, to take the short on a back test of this trend line somewhere around this 43 area, as long as the divergence is still there, which I believe it would be. And then you pop it, you know, that's an objective short up there around 43 for a move down to gap fill at 35. That's a nice trade if you can get it. I mean, that's a 20% drop, so I like that as a potential. All right, let me add this one to my short list. I think it's decent. Move that from long to short because I had it as a long down here. All right. Lululemon. Lulu's like been dead money, guys. Someone asked me about Lulu. If I look at that, it's just sideways. So nothing. It's just sideways. There's nothing. I don't see any trade here. You could trade the ranges, but why? I'd rather find something different. All right. Let's see here. Adrian, appreciate that. Thanks for the super chat. Hey, I'm glad. Someone said they had a great week thanks to my intraday updates. That's great. You know, I mean, that's the easiest way for me to point out the kind of the fluidity of the markets. Tell you guys what I'm thinking is in that private member group. So I have been thinking about changing the price on that, not on the private member group. I mean, I know I'm providing tremendous value because a lot of the trade ideas that I'm putting out there, I take most of them myself. I don't take them all, but I don't give you guys a trade idea, especially in the private member group, unless I'd be willing to put my own money on it. So I put the ones out there, and many of them are profitable for me. So I know I know that there's money being made. And YouTube, I think, takes some of that revenue. I mean, I get like $3.50 per person per month or something. So I could maybe double that, and I think there's still a ton of value. I'll think about it, guys. That's the nature of things. As value is there, I think it's worth. It's worth. As long as I'm providing value, I don't think there's an issue with increasing the price a little bit. If I start sucking, then I'll just have members drop off, and that's okay. That's the free market. telling me that what I'm providing is not worth it. All right, guys, I need to get back into these charts. TLT, not really interested in anything there right now. Etsy. Looks like a short. All right, short setup. You have negative divergence on the daily. Okay, both momentum indicators has negative divergence on the daily. So this was a divergent high. But we don't really have a trend line. So I can't quite use the daily. Can't mark that out either. You've got obviously something there and it's broken, but it's, a little gap fill, and they did fill the gap. I don't have an opinion on this one, to be honest. No trade for me here. I would just move on. Google. Oh. All right, so Google. Big gap up, obviously. I don't know what it gapped up on. Obviously, some sort of a headline, I believe. So on Friday, guys, that's the one thing all the FANGs were up except for Apple. It was kind of acting as an anchor. And so I posted in the private member group, guys, the market's not going anywhere unless Apple, without Apple. Well, Apple started to rally. I noticed it started to rally, and that's when I was like, okay, now the market can run because like Apple's, bringing up, it was coming up. So that's why I needed to stop out, because there was no, just the technicals weren't there for a short as Apple started to rally. At least not intraday. Now, towards the end of the day, I think Apple had a short opportunity because it rallied right into that resistance. So we want to short at resistance. But again, I saw Apple rallying and I said, okay, it's probably going to rally up to that resistance. Let's let it do that. So we stop out, avoid some additional losses, take another shot at it at resistance. That's kind of how I approached it. On Google, let's go to everyone keeps saying like it broke the long term, no, this is the trend line that I have. Now maybe I'm wrong on my trend line, but this is going back to 2008. I've got enough reactions here on this weekly chart. All right, boom, boom. Now this one is, and look at this. If I zoom in, I have to zoom in to show you. See that one? A little intra wick below and then recovery. I like that. That helps validate that as support. You dip down intra-week, run a bunch of stops. People are thinking, oh, the bear market or the bull market's over, only to recover and close back above support. It's a bear trap, and boom, rallied off that. Now, this is COVID, so I throw COVID out as kind of an outlier. Anytime you have a multitude of data points and you have, if you want to kind of take the mean of those data points or the median, I don't know, you want to throw out your outliers, and that's what this is. So, that is where we're at. Now this is broken trend. So this is bear market. That's what I'm reading this as. Okay, bear market. All right, first leg down, move down. They're rallying it, but still bear market. So we could rally back up to the trend line. That's possible because this bear market, maybe it takes years to actually resolve. I don't think that you're going to be in a bull trend like this in Google, get way overbought, sell off down to the trend, break the trend only to recover it and start, continue the bull market. I don't think that's how it's going to play out. I think maybe we might do this. This is possible, and then continue lower. But that's the weekly chart, bigger picture stuff. If I go down to the daily. On the daily, I've got could go higher. Again, no negative divergence, so maybe it goes a little higher and then puts in a divergence. On the hourly, no negative divergence, so yeah, could go higher. We've got resistance isn't till up over here. At least that I see. So that's all I have. So, you know, it gives me pause a little bit on the shorts. It's with the Apple short, I'm just looking for that little pullback, and then maybe there is some more in the rally. All right. I did cover Google. Cool. That's good because I had a lot of people asking about that one. Nvidia. At resistance. Okay, so here's my thoughts. Whether it proves to be right or not, I don't know. But look, downward trend line, right? That's clear and obvious. All right, Nvidia rally, it hit it, it's corrected, and then rallied back to it on Friday. Closing pretty much at resistance. With not a divergent high, though. So here's something that could happen. All right, the fact that it went tap, correct, back there, and tap, it's just kind of like knocking on this resistance more frequently versus you can see this is where we started the bear market and then you sold off. You didn't get back to it till here, and then boom, you didn't get back to it till here. That was, in terms of time, that's a decent amount of time. Okay, then once you get back to it, now you're back to it more frequently. So the frequency of testing resistance is increasing right now. And I think in general that's bullish. That could be bullish. No, we have not broken this resistance. And we still have, we have negative momentum, but we don't have divergence. So maybe what it wants to do, you've got some resistance right here. Yeah, I'd say it's somewhere right in here, I think, there's some resistance here. This is let me just get rid of that. I like this blue line right here. All right, this one, you've got enough reactions from above and below. You just rip right through it there. Enough reactions through here. Okay, there's another one. Maybe what we do is this, and it's hard to say, but you break out, okay? All of a sudden when you break out, everybody's going to be foaming at the mouth bullish, all right? And especially if that happens in the general market, like the triple Qs, everybody's going to be foaming at the mouth bullish. And that's usually what you need in a bear market to signal the end of a bear market rally. You have to move the masses over to the other side. You can't have everyone bearish. So boom, you go like this, up to here, big resistance at 208.30. Probably have negative divergence up there on the daily chart. It'll look something like that maybe. And it would be a very objective short. All right. So I can't say if that's going to happen, but if we see that, we see the divergence, we see us rallying to major resistance, it is likely, it's a very objective for a short, and it's likely going to be, I think it'll be the end of this bull run, and boom, fall back below and just probably do some more crashy action, because you'll have trapped a lot of foaming at the mouth bulls, and now you have the energy for capitulation selling. This one I believe is coming down here, down to about 72. And then if I go to the weekly, this thing got way ahead of itself. So that's the thing. Here's the longer term bull trend line. I think when this is all said and done, this bear market, if I'm right about the bear market continuing for a while, I think we could get all the way down to here. I don't know when, so it could be, up here, or who knows how long that takes. But first things first, you've got a trend line way down here, and that's about 73. Yeah, I like that. So that's my general thoughts. As of right now, at resistance. So, if I look at the hourly chart, you even have a divergent high right now on the hourly. So maybe another pullback. It's at resistance. It's not. I definitely don't want to go long, and I don't think you'll have much of an opportunity if it breaks out. But if it does, that's about a 15% run up there. So maybe you could catch it. It's more of a momentum trade at that point. I'd probably be just sitting back and looking for that beautiful short right there. 208-ish. The reason why I went into this one in more detail, I think there's a lot of opportunity for a trade in this one. It's just which trade do we want to take? If it's going to rally, do you want to take that? You could. I think the better trade is waiting and shorting it at there and catching the big long leg lower. Of course, nothing guarantees that it's going to break out, and nothing guarantees that that's going to be the end of a bull run, you know. We have to wait for the charts and what they look like at that point in time. All right. How much time do we have? I got about 10 minutes or so. All right. U or UDR? What are these ones? Oh, Unity. Okay. This is like a gaming software. Well, so you've got the bullish divergence on the daily. It's there on both. All right. These are divergent lows. Oh, I don't want that. So, you know, that... This looks like panic selling, capitulation to me, kind of. Yeah, that looks kind of bullish to me, to be honest. So I've got a downward trend line there. You've got a breakout, then it fades. It's getting choppy. You know, sometimes this happens. This can be a mess. Because you break out, you back test, everything looks fine, then it fails, then you recover. It's whipping it anybody who's trying to take a position, it's just whipping them out of the trade. So that can be tricky. Earnings coming up. With the bullish divergence, I would lean bullish. All right, that's how I would lean. And, you know, maybe earnings looks good. This will probably run pretty strong if the earnings comes out positive. Just look at these reaction highs. Oh, somewhere right in here. Yep, there we go. So I like that. 45-ish, 59-ish. That's probably about it. I'll just those two levels for now. You have the 200. I think you pop, you get to the 200, you probably pop it and get up to this 45-ish, get a reaction there. 40% run right there, so. Earnings can be honestly, if I was going to take a trade here, which, you could, it's a little more of a gamble ahead of earnings. It is a bullish setup. Ideally, you could grab it at the trend line, but the thing is, this trend line hasn't been very friendly. So, to me, it's just more of like a gamble. And anytime I have something that's a gamble, if I lean one way, you can take it, but I would just lower my position size. Don't take a regular size position size. Let's say you buy 10 grand in a stock, maybe 2,500 or something like that. It just depends on your risk tolerance and also your bankroll. But position size lower on that one is how I would feel about it, just with the indecisive nature of what this trend line's doing. But I would lean bullish. All right. Yeah, VIX is very low. Pretty low. We're in a bear market, and VIX is all the way back, is back down here. So, I think VIX is probably due for a spike. Look, you had this this bullish falling wedge, you broke out and you back tested your. Yeah, I think the VIX could run, so we'll see, guys. If you haven't hit that thumbs up button, please do so. If you're new and you're not a member, I know most of the people in here are members, but maybe check that out. I think there's a lot of value there. It's a private member group where I basically I'm giving you guys additional tips, trade ideas, charts, all kinds of stuff. I throw it out to the private member group within YouTube. It's just a member section within YouTube. And then the course. I think I know not everyone's taking it. Maybe you feel like you know everything, but there might be something in there that you don't know. So check that out. Helps the channel, helps support me. My channel is never going to be a huge channel. It's always going to be a small, dedicated, focused group, because this stuff is, for one, you need to have money to make money in trading, and most, a lot of people don't have money. And then two, you need to be, I'd say you need to be semi-intelligent in order to focus on this stuff, and not just looking for, Logan Paul videos or whatever. I don't know what's out there in the YouTube world. It's mostly just entertainment. People just want to be entertained and then, complain about why their life sucks or why they don't have the things they want. They want to just watch people on YouTube drive around fancy Lamborghinis, thinking that's, follow a person who shows you a Lamborghini and that's how you end up getting a Lamborghini yourself. No. The way you end up getting a Lamborghini yourself is to, one, build your knowledge base, and two, look for the stuff that is boring, not the flash factor. I mean, not again, I'm not promising anybody a Lamborghini, though. Obviously, I don't have one myself. All right. Let me see. I got a few more minutes, so now we're going to go ahead and just scan through. Kobe, appreciate that super chat. ANIX. Okay, if you want a longer term investment, I mean, it's tough for me to throw that kind of stuff out there because maybe something looks like a good long or short, I guess, right now, but that will change, at some point. Longer term, you really need to go down to like the longer term charts. This is the monthly chart. This thing has no I guess it goes back to 2014. Pretty much dead money. Longer term. This is a biotech. I mean, look, this is just Nightmare City if you're an investor. I mean, you're just getting chopped to death. So to me, I wouldn't touch that as long term. I don't know what long term is, though. Everyone's got a different definition of long term. So I can't, and I can't really give investing advice. All I can do is tell you what I see in the charts. All right, there's your weekly. But it's not, you got something going on like that. It's coiling, and this pattern is, this pattern you typically will you're kind of, the buyers are stepping in earlier and earlier when it dips, and it's being rejected at resistance. So this pattern typically will break to the outside, or to the upside. But until I saw that, I just, can just continue to do that. That's all I have on that one. There's really, that's all I can really give you. I don't know what longer term is, so. All right, let's see here. Just a few more. STNG. All right. I appreciate you guys doing some of the work yourself and finding these charts because, I can't find them all. This is interesting. Okay, what are we? Marine shipping? Transport? Okay. Because, I got subscribers pointing out good setups as well. So here's this downtrend line that I had, but again, I only have 2 data points. I could call that a third. That looks like a third, so we'll call that. Big run up. Negative divergence on the daily. that's been building. So there it is. It's on the RSI and the PPO. Can't do anything with that. Looks like a short. There we go. All right. That's kind of a wedge. You can see it is wedging. It's getting a little tighter. Bearish rising wedge. Not the sharpest wedge, but it's a wedge. And then let's zoom into the current stuff going on. You can see this is where all the market makers just chop you to death, and they love to play games. Yeah. How far away is this one? 5%? Looks like a short to me, to be honest. Yeah, and I think you probably get down to the 200-day. There's some support right there. Looks like there's a little level right here. It's not a huge level, but we can call it. So there, that would be about my levels, and yeah, we'll just move it to right there. All right, levels of support, and because it looks like a short to me, 46.50, and then the 200, and down here 37.58. 22% drop, or 23 down there. Could be a lot more in the cards as well, but that's what I would say for right now. Obviously, you always have the potential for a back test of this trend line too. Looks like a short. And it looks like we have a sell signal. If I look at the, let's go to the weekly. See that? This is why it's choppy action right in there, but if you get to the weekly, look, we had no weeks where it broke this trend line. Even right here, they closed the week right there. So this week they closed it right there. This week they closed it right there. This week they closed it right there. Sell signal on the weekly chart. Okay? That's what I got on that one. So I think this is set up for a move. You know, you could maybe take the widest part of this. It is a wedge, and yeah, right there. 37.50. That would be my target, really. I think you get down there. So I like that, actually. Maybe I'll, hopefully, they don't gap it down on Monday, and I can, maybe I'll grab some of that. Let me add this to the short list. Nice find. I think it's decent. Good risk reward, you know, so I think it's worth a shot in my mind. All right, Cultivation Tea, appreciate it. Well, on that note, I think it's probably a good time to wrap. Guys, check out the products I got. Lots of value there. Or don't. You know, either way, I appreciate you guys participating in my channel. It's been fun over the last few years. And that is all I have for today. So I will catch you guys on Monday. Take care. Bye.